Perform Coaching, doing the preview for April 1st. Welcome to April, guys. So before we get started, there was good news out of China. All the econ, the perceived numbers were strong. I have no idea what's real and what's not real anymore, but I do know that the market is pressing to the upside. I do know that I don't want to be trying to call a top. So I'm just going to trade my setups as they come along. I am willing to short. I prefer to catch rotations down where they trap late sellers for the pushback up or the continuation trade. That being said, I'm willing to take both sides. I'm just going to be much quicker to cover my trades on the short side, and I'm going to be more willing to press on the long side. Pretty straightforward. Just real quick, I bet I closed it, so I will open it. And I've just bogged my computer down by trying to open this file over here, but that's all right. I'll get it handled. Just 1 second. And the never-ending wait. Okay, this will presumably come up. But maybe not. Okay. Let's try one more time, see if it works. Okay, we won't worry about it. Past performance is not indicative of future results. This is for educational purposes only. The idea here is I'm sharing my trade plan with you in hopes it'll make you a better trader. But don't follow me blindly, guys. So first of all, I have bad days. Sometimes it's because of myself. Sometimes it's because my setup doesn't work, right? The idea is to stay on process as much as possible. So with that being said, we know that we have a gap up. So just before I cover any of the charts, let's go through the list on the gap up and just the basics, right? And we will go to the ES 5-minute chart, which should be hidden right over. Where do I have that little beast hidden? Let's find out. Get rid of this. We'll move this over here. And I have QES. Profile, range bars, and Q 5 minutes. Guys, I apologize. I reorganized this, and it did not reorganize the way I wanted it to for one reason or another. 1 second. Let me go through the list. CL, ES, ES, yes. That is frustrating, but that's okay. I will fix it. Here we go. ES profile. You know, I had it because I had it last night. So, therefore, if I have the ES profile and I have the location set correctly on it, which I do, I will just do right-click, duplicate chart, chart settings. Okay, it'll take just a second to load it. That's the chart I wanted to copy over. So I will take this chart, right click, duplicate chart to chart book. Okay. And now that that chart is carried over, which it is, I can close this down. File, close, chart book. No. That should take care of all those problems. Let's see if it'll do it real quick. There we are. And then this will be ready in just 1 sec. Wow, that was a lot of work just to get one chart book over. Okay, analysis. Clean chart, 5-minute bar, and here we go. So, very simply, right? Number one, we are gapping up. We are currently trading 28.58 and a quarter. And if we change this to 24 hours, which is fine, we'll do it. We can see how it behaved overnight. I've got to fix that on the other chart book. 8:29 a.m. Okay. Load quickly enough. Oh, and here we are. Okay, that's the overnight. So first of all, you can see we opened, drove up, and we've been trending up since then. So first question I would have on the 24-hour is, can we get behind the 62 retrace, right, from the gap? Number one, right? That would be the first indication that there's actually a problem. This morning would be trading below 28.50. We're looking for open drive higher, open drive lower. So what I want to point out here on this chart is if this were the gap, let's say this was the actual open right here, right? If we don't trade, if we get above the first 5-minute bar and we don't trade back into that bar or underneath the top of that bar, there's definitely no short, right? Yes, you can get cute and pick it off from these areas up here. But even if you do get the location, you can see we came right out of the white zone. We traveled through the yellow. So look how it went right to the first resistance area, right? Yellow and white are strong resistance areas. So I've gotten some feedback from people who say, well, you've changed your trading style dramatically. I have not, right? These are still key locations. If you were trading and you need a place to put your trade on, right? These are still key locations. Nothing has changed about my charting style. What has changed is I am more focused on getting very precise entry exit stops, right? Because what happens over time, these charts, anyone who's been with me over any period of time, work great for periods of times, and then the market shifts, right? And they blow your trading account up. And while I don't have a difficult time figuring out that the zones are working or not working, people who follow me do have a difficult time. So it pushed me to go, what do the entries look like that I can teach other people that they can follow very specifically, and they know how to enter in a more precise manner that shows that they're trapping sellers and trapping buyers. So what's the cost of trading like that? The cost is I don't simply take my support zones, right? And when they're working like they are right now, everyone goes, well, you're not taking the best location possible, right? That's the cost of it, because I'm not going to get set up necessarily in the zone, right? But the reward is my win rate is higher across the board by waiting for the micro setup. The other downside is the micro setup takes A, more discipline, B, more mental work, C, may not show up when the support area works. I can't fix both sides of that equation. It's one or the other. So if you look at how the market worked, resistance, above resistance, backside test, up to the next resistance points, rejection, rejection. White zone is the strongest zone. There's two zones here and an old swing high right over here. If this was the gap up, this would be considered an open drive higher. And what we want to see now off the first 5-minute bar that's forming right now, because we just opened, is I would like to at least be either below that first 5-minute bar or way away from that 5-minute bar if I'm going to try to press a short. And that's without looking at any of my setups. That's just basic 101, right? If I look at, let's do this. Let's do rename. 401. Okay. Chart. Detached chart. Okay, I have that parked off here to the right. If we look at the profile, which I have, and now I'm going to move this back over here. I'm going to grab my ES profile over here, which is right here. Why do I have two ES profiles? I think I can. Erase this with no consequence. Let's see this real quick. Chart. Detach. Okay, file. Save all. And let's make sure I got this right over here. So hopefully I haven't screwed anything up. And I'm going to bring up the ES profile, then I'll cover CL. And then I'll cover the setups. I don't trade the first half hour. If you do, probably in the wrong room, right? Because I don't. So long story short, number one, you can see this chart's screwed up, so I'm going to erase this. Yes. There we go. Okay. So number one, we are gapping away. That's US session only. Look to the left. You can see this is our old swing high going back to March 21st, right? We obviously need to get above that. If not, this is gap and potential failure. So the possibility of failure is there. Do I want to bet on it? Nope. Most big gaps hold. If you look throughout history, if you try to guess the number of gaps that were going to fail, you'd be in a very small majority of people who get it right. Right? They usually don't fail. They usually hold. Remember, the rule is failure to fill the gap, failure to get back below prior day's value area within the first hour of the day generally results in pushes back out and to the upside, right? So that's the rule of thumb. This is a good example right here on the 26th, right? So that's a half-hour chart. I'm going to break it out so you can see it, okay? See how we opened up? So this is a great example. See how we consolidate for the first hour, right? It breaks down. You think, oh, that's bearish. It's going to fall apart. All it did was come down and test value area low and push back to the mid. So I always get this. There was a white zone right here, if you can see from this anomaly, right? So when you look on top, what's the equivalent of this up here? Well, it's right here. It's this, and it's not a great place. It's an okay place. It's just not a great place, right? So it could reject out of here. If you want to be uber aggressive and try to grab that short, I just wouldn't stay short above 28.66 and a quarter, but I hate getting run over on top when we get above and they just keep driving. Remember, the whole thing that drove the market down was China's economy was getting crushed from the trade war. So positive econ out of China, whether it's true, false, or whatever, is going to be perceived as a positive, and we can drive right back up, right? So remember when markets, this is an important concept in trading in general, right? And I'm going to draw it out so everyone can see it because we've all seen it intraday. Markets trading intraday, right? Dun, 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 up and down. News comes out, right? Whatever. The President of the United States declares all other nations invalid. Bam, right? Down the market goes, okay? Originally, the market was working its way up to this resistance point. Had that news not come out, it would have gone. Report comes out. President's Twitter account was hacked. Totally untrue. Market goes wham, right back, right? And then what does it do? It treats this entire move right here, the fake news or the unreal news, as, oh, that's BS. And then what does it do? It proceeds right along the way. That would be an intraday picture. Now take that same picture, right, and go big picture on it. POTUS declares trade war with China, right? Market's going like this. Trade war with China, bam, right? Over many months and weeks, right? Then it comes back. Storyline is China will be crushed economically. They can't survive. The world economy is going into the hole. The Great Depression's around the corner. Market's going to tank. New narrative. President cuts deal with China or is willing to cut deal with China. China's economic numbers are good. Market does this, right? And then it treats this whole thing as, oh, this is a fake news flash, right? The trade war had no net effect, and we continue going about our merry way, okay? It works on small time frames. It works on big time frames. The problem is on the big time frame, it seems so real because it goes day after day, but the market will simply pretend like this never happened in essence and continue along its way of just pushing up if this is determined to have been a fake narrative, right? And that's not a political commentary on a president or China or anything else. It's just what's going on in the market, right? So with that being said, would I look at this and go, oh, the market has to go down, that's a double top? From a technical aspect, right, I'd say, yeah, sure, it's clearly a double top. But so what? Double tops are in every technical analyst book on the face of the earth, right? Everything you find at Barnes & Noble and on the popular books on Amazon and any bookstore you go to, right? So that means everyone can see it, right? You have no edge. I can see it's a double top. You can see it's a double top. We all see it's a double top. How do we know it's going to fail? Well, because sometimes it does. Well, okay, I hope you're trading one contract and you have a generous stop, right? Next, we are looking for is a rotation, counter rotation, or are we just going to get stuck up here balancing all day long? Number 3, can we get below the first 5-minute bar? If we can't, there's no downside at all. Next, half gap, which is roughly right here. right? Top of open window, which is now Dalton's Gap fill, right? And then next value area. All of that has to be gotten past before we can actually melt and push back into this balance area. The next argument would be, well, you're at the extreme at the top part of balance. That's true, but we've gapped away, and if you hold the gap and you keep trending up, that opens this for a move to 28.95. Okay, those are all important pieces to consider. I don't know how it's going to work out, which is why, even though I'm at a support or resistance zone, I'm going to use my entry, exit, stop method that I have and dial that down to a very small level to figure out entries and exits. That being said, okay, if this is a resistance area, I do expect the market to travel in, travel out, and for you to be able to get your 2 points. The win rate fluctuates on that between 60% and 85 to 90%, depending on the time of the year and the amount of volatility, right? So for those who've been following me for a while, if you're frustrated because I've come up with a new method for entry and exit stop, that's because it improves my trading, right? And while that may be a little bit selfish, my P&L is more important to me than the room. Does that make sense? Because I survive and eat and feed my family off my trading. I don't make a living off this room. I simply can't, right? It doesn't compare. The whole point behind this is know who you are, right? Know what you're looking for in a trade. And if you just want the zones and you want to trade it, my suggestion is you de-lever, take the zones. The win rate's over 60% generally. And long-term, as long as you can maintain a 1-to-1 RR, that's a winning formula, right? Sometimes it goes as high as 70 and 80%, occasionally 90% for stretches, right? That's not good enough for me because I use a lot of leverage, and you need to understand that. I'm using leverage. I have to be specific, so I don't take the zones blindly. And that's pretty much the end of the conversation on all three markets, right? I am looking for entry at key locations. On ES, if you look to the left, by the way, I want to cover this really quick. If you go all the way back, we're trading at 28.56. And you go, well, what happened the last time we were here? It's important because the markets repeat. I believe it's 10 or 8.7. There we go. 86. Is that correct? No. Where are we trading right now? 28.57. There we go. Last time we were here was right in this area. Okay, so see this big chunk I'm pointing to? This right here. See how we swept that whole area? Here's 28.57. See how this was a consolidation break, right? That whole day was pretty poorly auctioned, and that's what created, if you look to the right, right, that's what started the nastiness. See how narrow the ranges were before that? That's the day that opened everything up. So guess what? Two things before you get overly celebratory about, hey, that's great, we're going all the way back up. If you'll recall, right, the trading range on ES sucked once while we were above that 28.80. Expect it to go back to this long, slow draw crap trade, right, that we had in here before we broke, okay, because everyone was very sure we were going higher. There was very little insecurity, and the ranges fell apart. They were very minute. The good news is if you're a buy the dip trader, this environment's fantastic because it just doesn't dip very much, and you pretty much take every dip and it rolls back around for you if you can figure out support resistance areas. The sad part is be prepared to sit all day long. I would study this and then I'd go back and look because this is what we're about to enter back into if the market keeps grinding back up. And that range, right, sat from 28.75. The top of it was 29.58. And if you bring that in, you'll see that was, I don't have enough days loaded on this, but it was a very slow grind compared to what we had underneath. And if you trade ES, that becomes a problem, right? Because there's not enough rotation and not enough speed. What works here is buying the bottom of the range, just sitting it, wait till it comes to the top of the range. But I did not know too many happy traders in this whole stretch where we were just grinding and everyone's like, we're never going to make money again. Okay, so we either want to get just clear above that 29.49 so it can clear up and have a new range, or we want to hold below that 28.75 so we can keep the ranges relatively wide. But we are back to the scene of the crime from that, what is that, September, October 4th period. And it's important that you recognize that, because above it, expect it to be very slow and grindy. That's all I have to say about that. So let's go jump into I'm going to park you over here. Let's go jump to NQ real quick. Then we'll do ES again. I'm not trading the first half hour. Okay, ES is a different story. Hey, number one, every time you look at this and every time you get bearish, right, and you think it can roll over a lot, just imagine this. Go back and look on Twitter starting on December 20th, right, and go to every person, and I mean every person who called the top in this thing. Why is this thing stuck? There we go. Every person who called the top on this market. That's not cool. Something's going on here. I know what it is. It's the YouTube thing. That's fine. I'll fix it in a sec. Really? This is what we're going to do now? Come on. Do I just have too much open? I don't have that much open. 1, 2. I do not know what is sucking up the resources on this computer, but I will find out. My other computer is working just fine. So let's see if I can open this up. Hold on a second here. Reset. There we go. Let's just open it up. Move higher, please. Wow. Sorry, guys. I have no idea what's going on with the computer, but it is just dragging the daylights out of itself. Let me see if I can shut down some of this. I need this. What over here? So over here, I probably don't need. I will have to figure this out. Okay, well here we can do this. Close this one. Yes. There we go. There's one last chart. Let's see if this one will work any happier. There we go. I see what the problem is. ES. Stop. ES. Get rid of that. CL. Now all I need is NQ. I apologize, guys. I am just not having the easiest time of getting these to pop up. Hold on one second here. ES. CL, CL, ES. ES, ES, ES. NQ. There we go. Okay. Okay. Imagine all the people. And I see what the problem is here. So this is what we're going to do with this. There we go. Every person who's called the top, going all the way back to December, right? They said it's a top, it's going to reverse, it's a 50 retrace, you name it. So simple. Number one, see the swing lows over here? These got to get broken, right? This has to get broken, okay? This has to get broken. Wow, I'm going to have to shut some stuff down here in a sec. I may have needed to reboot my computer this morning. I just didn't. So now what has to get broken? That has to get broken right there, right? So the next thing that you'll notice is there's a naked volume point of control, 2 sets of them. One here, right? So you have to get below 71.71 in order to even start considering, hey, we're trapped back into a prior range where they try to hold the top, and we go down to balance. And there's a little bit of a black hole. See these big areas where there's black holes? That's areas where the markets can move through easily. So there's support underneath. There's support underneath NQ. Even if it went down, you just consider this the bottom of the trading range. And notice that we actually have enough strength that we couldn't actually test the old swing high, right? They ran it in front, and if you draw a 50-60, which I'm not going to because I've run it every day, we weren't able to make it back to the 50 retrace on NQ. That is strength, guys. That's not like, oh my gosh, it's weak. That is strength, right? The market has an easier order flow to the upside. Okay, it doesn't mean that shorts can't work, nor that they're not profitable. It just means that if you're going to try and stick it, expect it to snap all the way back against you and go to new highs. It's what we do in bull markets. Additionally, if you want to hold on to a trade, if you're kind of trader like, hey, I'm going to take a position, I got my entry, I'm going to hold it, wouldn't you rather be long in a market that keeps setting new highs versus trying to press a short in a market that won't retest its old swing highs, right? And this is a psychological thing. If you have a belief system, so this is important, I'm going to cover it really quick. If you have a belief system being markets can't go straight up, right? Even if you acknowledge intellectually, right? So if you acknowledge intellectually that markets don't have to come back, but you still have a belief that even with that, acknowledging that intellectual side, that, hey, they really don't go straight up, they have to revert to the mean, and you have that, it's an internalized belief system, you have a very hard time, A, taking longs up top, which I've experienced personally, right? Or and B, you may fight it the whole way. And a great example of that is religion. I don't care what religion it is, right? If you meet a devout follower of religion, every religious person I've ever met who's really religious, not just arguing, right? They actually have a practice and a faith, right? If you go, prove to me that your religion is legit or real, right? They'll all say at the end of the day, it's something you just have to believe in order to be able to see it, right? So in that case, what that says is if they believe it, no matter what evidence I present to them, that that's untrue, right? They are going to operate on a system that just because I can't see the evidence, I still believe that it's true, and therefore anything you say goes away. It's the same in trading. If you have a belief in the market, right, the difference between religion and trading, your religious beliefs don't cost you anything financially, at least in this life, right? And importantly, right, so importantly, they can cost you a ton of money in trading, right? So you have to ask, if you have a belief system that says the market can't go straight up, therefore I short, you need to question whether that belief is legit, right? And B, you also have to question whether you think the markets can't go straight up, right? There's ample evidence that they actually can just go from straight down to straight up. You're looking at it, right? And you need to write that belief down and address why you have that core belief so you can switch to going long when it's appropriate, which is in a lot of cases in this particular market, right? So NQ's on railroad tracks. The easiest trade is to find the trap shorts and push it back up, because every fund manager in the world starting January 1st who isn't long the NASDAQ right now is having to chase, right? So when people refer to shorts in this market, whether it's ES, NQ, doesn't matter, right? Remember, the real shorts are fund managers that are sitting in cash, right, that are now so far behind the curve of performance that they have to buy every dip, right, in order to start catching up. It's the end of the first quarter, and they just don't. If they miss this move, they're trying to figure out how the hell to fix it, right? And that's a rough job at this point. So there will be dip buyers underneath unless we get some type of fundamental news that breaks everything. But right now that trend is actually going the other way. We're getting news flow that is saying, actually, if you're not long, you're wrong, right? And it's going to force those guys' hands. And that's so when you refer to shorts, it's not actually people who are short. They're just long cash, and their cash isn't returning, which is a position, right? And cash is not returning the same return as being long stocks right now. And that is a problem, right? That is a true legitimate short position. That's a problem for fund managers. And believe me, with the amount of money they make, right, and the amount of money they deal with, they will do everything they can. They will treat that as a net short and do everything they can to get that cash into a long position, right? And they start playing this game of chicken, trying to figure out how to get in and how long they can wait. And eventually they break because what happens, it's important that you understand this from a structural standpoint, right? Who runs the market? There's a bunch of retail traders. No one with an account of less than $100 million can do anything in this market that has any influence. You don't even exist. I think that covers everyone I'm talking to here, right? So therefore, right, your trading has no influence. Who gives a shit if 100,000 day traders think the market's overextended? What matters is a very small group of people that control a very large amount of money, right? And they have a net short position. If they're net long cash, which means they're net short the market because it's grading against the performance, and they're going to have to explain themselves by the end of the year. And it creates a mechanical system by which on every dip, they are going to look for an excuse to throw that cash. They want to get out of their losing position, cash. They want to get into exposure where it's providing a larger return because they're going to have to explain it to their customers. And this is how it comes down to at the end of the day. I don't give a shit what they explain, right? If you are a pension fund manager and you have, let's say, $300 million with a fund manager who's, let's say he's 10% exposure or even 30% exposure to stocks, right? 70% cash because he's afraid of the China war back here. That dude goes, I need to at least show that I tried to get exposure to the market. And he's in a lose-lose position. His lose-lose position is the market keeps going up, he was in cash, they're going to pull the capital against the guy who got long over here. And believe me, there were, because Peter called the bottom on this thing, nailed it, right? Who were long on the 25th, 26th, anywhere in here, right? We just use this to load up. He's competing against those guys because the pension fund manager is going to go, you know what? John over here got long on the 26th. He's up blah, blah, blah percent. You had 20% exposure. You're long cash earning 1.25% interest, right? And you're way behind. So what he's going to need to say is, hey, look, we missed a shift. We started getting more exposure to the NASDAQ later because he wants to be able to defend his job at the end of the year and not lose his $300 million from the pension fund, right? And if you don't believe it's true, it's true. All that academic BS and the whole, this is my trade plan, all goes out the window when you know you're going to lose a huge chunk of management fees because that's how they make their living, right? So remember, that's what's driving the market. Every dip is going to end up getting bought until you probably get underneath this swing right here. And at a minimum, take out these points of control over here to the downside. And shorts, if you'll notice when you look back, when do shorts get easier? Shorts get easier not on the initial break when you're calling a top. It's afterwards, after the break and the backside test. That's when it gets easier to grab the short. And then also remember, when the short gets mega easy, you're usually close to a bottom and it reverses and the ranges get narrower on the way back up. I don't have anything else to add on NASDAQ besides that. If this is a top, that's great. I'll short it once I see the setups come. But I'm just aware that on dips down, we should find responsive buyers back up, and I'm willing to trade both sides of this trade. Long story short. Let's cover CL real quick, and then we'll just go to the actual setups since it's 5 minutes till. I think that's an important concept for people to understand. Hopefully you got that. CL. Horizontal lines. Yes. As up gets, right? It's on rails. This is a sign when oil rises that world economies are doing good. I'm not an economist. I'm not a swing trader, not a long-term investor, but I've been around long enough to know when oil gets weak, it's because there's a perception of weakening world demand. When oil gets strong, it's because there's a perception of higher demand because people generally perceive the economy to be stronger. This is often a canary in the coal mine. Now, realize oil can tank and the market cannot tank, right, because it's based on supply and demand. But as a general rule of thumb, if you look at oil, it shows a risk on or risk off profile. And you will see since February, this has been risk on, and it supports the idea that the economy is getting better. Secondly, looking at this chart, what you will see is this is your support area below 57.47, and the clear targets above are 62.27, 35, and 63.35, 64.90, right? And you'll notice we're in a black hole here. See how there's no points of control in this area, really between 57 and 62. And that's why the market's being able to continuously grind up, because these, so the anomalies are important. If you've been with me for a while, they show where we'll get rotation and counter rotation. But when you have black holes, right, it doesn't mean that the market will travel all the way through them. It just means it can. Like here, see how there's a black hole here once we got above, backside tested, but eventually it grinds through. See when it got to resistance, rolls back down, comes back, tests, decides not to come back and test this area. Where's the next area that's untested? Once we get past this point of control, these 2 points of control, what does it do? Balances, builds energy, closes above. Guess what the logical target is? 62.27 is the logical target upstairs. And then you have each of these resistance points above. And our job as day traders is to find those areas in between where we can enter for longs and shorts. But the easier trade, there have been some good shorts in here. The easier trade has been finding pushes down for rotations back up if you're a swing trader. That's all the importance I have on this. If you look, the chart's doing fine from Friday, prior day's high, prior day's low. We have to get past this anomaly in order to go lower. You can see we responded right off of it. This is inside value, but because of the strength in the market, you're likely to get a response out of the 60.14, 60.05, right? And then there's now a half gap sitting right here, roughly. I'm not going to draw it out, but it's roughly 59.50. Expect a strong response out of that. And you clearly have to break your swing low in order to start a bear move. And we're nowhere close. And the market has had every reason to be able to go lower here. And it couldn't even break this. So one of the keys is when people get nervous, see how we just break these swings? So see when we came back up and rolled back down, people pressed over here. It should have been pretty easy to break this swing, right? Test 1, test 2, that was test 3, and test this point of control. And when you can't get down to test that point of control, that should have been a pretty easy stretch. If you look from where we closed, which was 59.40, right? And you take away 200 ticks, right? That's all it would have taken to get to 57.40. When it can't break the swing to the left, it's a sign of strength, and expect whoever's not long to be squeezed back in onto that position, right? And that was a big clue right there. So same thing over here, right? We tried to push out above the swing, closed in, we've gapped. If I was going to be bearish or think the market was really going to roll, I'd want to get underneath this anomaly and back into this range here and then find short setups to make sure that I wasn't trying to short in outer space where we could still push towards that 62, okay? Lastly, on setups, I want to cover this one more time because I've switched. I had difficulty the last 2 weeks figuring out what I wanted to take, right? If you came in the room within the last 2 weeks, I couldn't quite read the market as well as I wanted to. And it wasn't that I was unprofitable, but I wasn't extremely profitable, and I was missing some key trades. The moving averages are simply lines of delineation that make it easier for me to figure out where I want to take my trades. I don't have them completely set the way I want, but they're pretty damn close to what I am looking for, okay? When you combine them with bias. Wow, there must have been econ. There you go. So my point behind this is, number one, what do I want? I want to be, if I want to take shorts, right, and I'm going to refer mostly to NASDAQ, but I'll use ES as well. Number one, I would prefer to be underneath, I'm going to look for shorts, underneath this orange moving average. I'm not going to give the time frame on it because it doesn't matter. Above it, I think we can push higher. Below, I think we push lower. And when it's going sideways, I'm cautious on it, right? But long story short, this moving average lets me know that I have an easier time when I get my setups, right? Fractal up, fractal down, speed bar, shift. There's multiple ways of entry, and this has actually helped me get more aggressive on my entries, and I'll cover that in the room over time. However, I want to be underneath because it's easier for me to get extensions to the downside. Just like when I'm above, it's easier for me to get extensions to the upside, right? And then you have to overlay that into support resistance areas. So on this chart, for example, if I take this chart and then I integrate it with, is that it? Yes, what chart number is that? Number 6. Chart settings, advanced settings. Well, that didn't work very impressively, did it? Chart settings. Let's go back to do this real quick. Chart settings. Oh, maybe that's the problem. It's 4. I feel a little bit like Mr. Magoo this morning. I may have relaxed too much this weekend. Oh, there we are. Okay. When I go back and look at my, so now look at the chart, how this played out, right? All noise. Push out a little bit. Okay. This is resistance, right? It's a blue area, but it's resistance, right? You can see going back to London. Are we back, Bill? Are we back on regular London time now? Great. 10:30 is actually London close. Fantastico. The PA should improve because of that. Okay. So if you're looking at this, right, notice resistance, resistance, resistance. Notice that once I slipped underneath my moving average and I took my shifts down, right, and shifts up and got underneath those, when I'm underneath the moving average, I was actually able to get extensions to the downside, right? If you will also notice, what do we know about that blue moving average? That blue moving average can be traded through relatively easily, right? So, and my bigger picture, right, which is above prior day's high, right? First, and we just simply have not been able to make it underneath this consolidation. So this consolidation is doing one of two things. It's either trapping the living crap out of late buyers, or we're building energy for a move higher. How would I know we're going to possibly come in and fill the gap? I want to get below the first 5-minute low. B, I want to be underneath this moving average to push, right? So if you'll notice when we were pushing in the first time, these shorts underneath here and in this zone worked pretty well. When we get above that moving average, and if we hold, this zone is likely to break and 75.20s to go to. So what do I want to be? Underneath that moving average. And if it won't turn or it's not moving quick enough, right? Tough. I'm still willing to wait till I get underneath this moving average to really press my short setups. They work underneath. And then the other part is observation, right? If you're getting short setups, notice it's just not falling apart, right? The market just doesn't have the, this is an important concept if you're trading, right? Look at that, right? Let's say you got everything else, the perfect short setup, the perfect entry, it's below the moving average, everything was beautiful. And you looked at that chart and you would just kind of go, you should look at that and go, but we're not going down, right? You should look at it and go, it's just not falling apart. Like it should have fallen apart over here, right? And it's not. So what do I think the likelihood is? If we fail to get back underneath this moving average, fail to get underneath this whole consolidation, I do think we're going up there to 75.20 or whatever that number is, 75.20. Why? Because there's no sellers. No one has showed up yet. We need the sellers to show, and I'll show you what that looks like. Right, when you look over here to the left, where was our last decent push down? Right there. Okay. So see how we had this consolidation over here? We said there's no sellers, no sellers. Well, look, when they show up, when they see over here, we're just grinding, grinding, grinding. Why is my connection bad? Is the audio okay? Cut out a bit. Yes, on the audio. I don't know what the deal is. Well, it's cutting on and off. I'm going to have to figure that out. Okay. See underneath here? We come underneath here, and it rolls. So let's pretend this would have been a zone. Consolidation. I don't want to short. Don't want to short underneath. I'm now looking for short setups, but I can visually look and go, hey, it's actually going lower, right? I'm actually seeing it break, and I can catch these secondary and third breakdowns. But when I look at that market overall, right, and then if I have a strategy of going, hey, I think the market, there's dip buyers, right? So I get back above that moving average. I'm looking for longs. Look how far off the low this thing pushes back to the upside, right? Look how short the consolidation periods are on the bottom versus how long they are on the top, right? Your easier trade, all I'm saying is right now, is to the long side. And B, your leg A's, right? If this is AB, you get no CD in this environment. Just be aware of that. That's all I'm saying. You get an AB, you don't get any CDs in this environment. So I'll call out the trades as I see them. The moving average is new in the room. I think it'll improve the results, but I'm going to wait until I actually see the results set up and that there's actually a presence of sellers before I jump all over trying to grab a position, okay, and try to press it. Hold on one second here. I need to do something really quick. That's what I was looking for. So in the meantime, NQ is still up. Is that correct? It is. $47 points, and we'll see if they have any ability to push lower at all. Would not shock me to see that they don't. Okay, and then keep an eye on the 5-minute chart. Are we above or below the first 5-minute bar on ES, NQ, etc., etc.? Because if we don't get below those, there is no short. We are up into the white zone on ES. You obviously have to get below 28.54 to get a party started to the downside at this point, right? Any questions? My trade plan is to take my setups on top. The fractals have not been showing up as much as I'd like them to, but that's okay. I'm confident that they will over time. NQ, I'll show you a 5-minute chart here really quick. That's overnight. I'll switch it over to the day session only. There's NQ. If you get lost in the weeds, this looks like it's a big down move. It simply isn't, right? There's the first 5-minute bar. We did get underneath it, but just consolidated. It hasn't even tested support down here at 28.55. And there's room above. It's just not anything bearish on that chart yet, unless you're a top caller. I'm not. So that's that. And then let's go look at CL real quick. I can close this, yes. And of course I don't. I know what the deal is. I see what it's doing. Go. CL chart. CL profile. CL 5 minutes. There we go. Chart. Detach. And there's CL. And as you can see, it does not look like it's suffering, right? That's the US bid session open. And this area I have highlighted because it's an important area. But that's your white zone above. Those are your targets. This is the mid of a half gap right here that we're in. So potential area where you might see rejection out of it. But again, I'm willing to be very, very patient in pressing the shorts. It's Monday, right? It's a great day to trap traders and reverse it. It really is. The problem is the thinking's all right. It is a great day. Show me, right? Like actually show me, oh, we went lower, or oh, we're actually driving in a way that's going to hurt the market. I don't see that yet. So when I do, I will trade it. But until then, I'm willing to be patient. Okay. That's a long setup right now. We'll go from there. Any questions? Is everyone clear? And when I do have a trade, I'll call it out. Understand, when I start to get grindy and my win rate goes lower, I know it really hurts people in the room if I call out trades. I really need to be in a rhythm to go, this is what I want to do, right? And so long story short, I'll be very, very patient until I get those setups, right? Anyways, let's get to work. Guys on YouTube, thanks for joining. I know that was a little disjointed. If you'd like to visit the room, just send me an email, tradeandperform@gmail.com. Happy to extend you a pass. However, my main goal is to make profits over time, not to necessarily find a trade every single day or to trade the hardest environments or to be a guru. So anyways, trade well, don't blow up. It sucks, right? Take your time, learn your craft, know what your specific trade is, and trade it. Don't worry about what anyone else is doing. Have a great day, everyone.